There is an invisible game happening every day, surrounding you even when you're not aware of it. It isn't played on a board or inside an app but inside courtrooms, digital ledgers, offshore databases, and the private strategies of the ultra-wealthy. While most people are taught a simple formula: work hard, save consistently, invest cautiously, the richest people on earth follow an entirely different playbook. The financial world you see on the surface is only the public stage. Stock tickers, interest rates, and market updates. Beneath that stage lies a second system, a quieter one, created to protect wealth, not merely grow it. It was designed to shield fortunes from taxation, crises, and the constant erosion the average person faces. To understand how this hidden machine came to exist, we have to look back to one of history's most influential commercial societies, Venice. In Venice, the world first witnessed what happens when wealth stops being tied directly to a person and becomes tied instead to legal structures. While merchants traded openly in the chaotic markets around the Rialto, the city's elite families operated under a different set of rules. Their wealth didn't rely on fragile ships or risky voyages. They built legal shields, early versions of liability protection, that allowed them to finance ventures without endangering their estates or family fortunes. Their signature invention was a special partnership, where an investor was responsible only for the money they put in, not their entire wealth. If disaster struck, their assets remained untouched behind a legal wall. This separation between the individual and their capital became the foundation of every sophisticated financial structure that followed. Centuries later, the British Empire would refine these ideas into one of the most powerful financial tools ever created: the trust. A trust allowed the wealthy to place property or funds into the hands of someone else to manage, making the original owner nearly invisible in the eyes of the law. Estates could be protected from creditors, kings, lawsuits, or even political upheaval. And as the empire expanded, this system traveled across continents. London grew into a hub of legal engineering, and the trust evolved into the backbone of what we now call offshore finance, legal environments that exist outside the reach of local taxation and scrutiny. As war costs rose in the 20th century, the wealthy quietly moved assets into jurisdictions that promised secrecy and extremely low taxes. Channel Islands, like Jersey and Guernsey, became ideal hiding places, offering a financial reality entirely separate from everyday citizens. While ordinary workers faced income taxes and growing state obligations, the elite were quietly building a parallel architecture where their money could shelter indefinitely. But this network needed fuel money that could move freely, without borders. And the Cold War created exactly that opportunity. When the Soviet Union feared placing its oil-derived dollars in American banks, London institutions offered them an alternative: deposit your dollars here, outside US rules. This gave birth to the eurodollar market, an enormous pool of unregulated US currency moving through offshore channels, invisible to American authorities. From that point on, capital became global, stateless, and incredibly difficult for any single government to control. Newly independent island nations later joined the system by adopting British-style financial laws, attracting wealthy investors through aggressive secrecy policies and zero-tax incentives. Islands like the Caymans and the British Virgin Islands became pillars of a growing financial web. Inside this hidden web, new tools emerged that would transform global finance. Shell companies, corporations with no employees and no real operations, became the masks through which ownership could disappear. A billionaire buying a luxury apartment rarely puts their name on the deed. Instead, a company in a distant jurisdiction holds the property, shielding the buyer's identity. Then came advanced asset protection trusts, legal fortresses capable of insulating wealth from lawsuits, divorces, and even foreign court orders. Multinational corporations soon adopted similar methods, shifting profits through multiple countries to drastically reduce their taxes. Money could be earned in a high-tax nation, rerouted to a low-tax subsidiary through internal payments, and finally deposited in a zero-tax haven. This wasn't exploitation, it was a system intentionally built to allow it. The consequences of this parallel world are enormous. Governments lose trillions in potential revenue every year, which means less funding for roads, schools, and public health. When corporations and billionaires legally avoid taxes, the financial burden shifts downward to workers and small businesses, who cannot compete with such complex structures. Local companies paying their full taxes are crushed by global giants that pay almost none. More damaging than the financial impact, though, is the social effect. Trust erodes. People sense that different rules apply depending on your wealth, and in many cases, they're right. Why doesn't this system face strict global resistance? Because the governments that could dismantle it often benefit from it. Officials who learn the tax code from the inside frequently transition to private firms where they help clients exploit those same laws for enormous fees. Countries compete to attract foreign capital by offering lower taxes and greater secrecy, making cooperation nearly impossible. And ironically, the strongest supporters of this system are two of the world's most powerful nations, the United Kingdom and the United States. British territories host many of the most popular tax havens. Meanwhile, our states like Delaware, Nevada, and South Dakota have become global hotspots for anonymous companies and impenetrable trusts, drawing foreign wealth into America's own financial shadows. This secret machinery played a major role in the 2008 financial crisis. While the public narrative blamed subprime mortgages, a large part of the disaster stemmed from the offshore ecosystem itself. Banks packaged high-risk loans into complex financial products, then transferred them into shell companies located in tax havens to hide the danger from regulators. Rating agencies labeled them safe, and institutions around the world bought these ticking time bombs without understanding the risk they carried. When the housing bubble burst, the damage swept back through the global financial system. Ordinary people lost jobs, homes, and savings, while many of the architects walked away protected by the same structures they had built. Today, the hidden system also serves as the escape route for global corruption. Dictators, oligarchs, and criminal networks rely on the offshore world to store stolen funds and convert them into legitimate assets. Money taken from hospitals, schools, and public institutions is laundered through shell companies and secretive trusts, eventually landing in high-end real estate or Western financial markets. Every luxury apartment purchased with stolen wealth represents services that were never delivered to the people who needed them most. This hidden system continues to evolve. Traditional bank secrecy is fading due to international pressure, but new forms of concealment are emerging. Wealth is increasingly stored in luxury real estate, private art collections locked inside secure warehouse vaults, or even intellectual property held in tax-free jurisdictions. Cryptocurrency has added a new layer of mobility, and when combined with traditional offshore structures, it becomes another shield against visibility. The system is not shrinking, it's transforming into something even harder to detect. Standing in front of such a global machine can make anyone feel powerless, but there are lessons hidden within this architecture. You, Dan T., need to imitate the morality of the system's creators to learn from their strategies. Understanding how wealth is protected can help you protect your own future on a smaller scale, using limited liability structures for personal businesses, focusing on real, tangible assets over overly complex financial products, and building a foundation of financial knowledge, all strengthen your position. What truly empowers you is understanding the rules that shape the modern economy, instead of playing blindly. The secret financial system exists because a small group understands the rules better than everyone else. But the moment you become aware of those rules even at a distance, you begin to think differently. You begin to build resilience, not just wealth. You begin to see how power moves, how money travels, and how to avoid becoming collateral in a game you never knew was being played. The hidden system may continue to operate, but you no longer have to stand outside it as a pawn. Knowledge itself becomes your protection. And in a world where the financial landscape grows more complex each year, that knowledge is the one asset no system can take from you.